Hello there, my name is Kathy Greven from Greven & Co, accountants and financial planners, where it is our mission to create a better financial life for our clients. While people expect the bare minimum, we challenge them to expect far more. This video provides general and factual information known at the time of production and should not be used as advice, as your circumstances are unique and this video has not taken that into consideration. We recommend you reach out to us and get specific advice relative to your circumstances. Please refer to the disclaimer slide at the end of this video. With COVID-19 and the government stimulus packages, they also increased the instant asset write-off from $30,000 to $150,000 from 12th of June to the 30th of June until this week. Newsflash. Governments have put out, but not yet legislated, that they will extend the asset write-off of $150,000 for a further 6 months to the 31st of December 2020. This is to support small businesses whose turnover is now $500 million or less. It is important to point out that the instant asset write-off will revert to $1,000 potentially on the 1st of January 2021, and those small businesses eligible has reduced down to a 10 million turnover from a 500 million turnover. So when making decisions about the timing of your purchases, remember these facts. The deep dive into the asset write-off, there are 3 things to be mindful of: who is eligible, what the thresholds are, and how that is calculated, and some exclusions and limits to take into consideration. So the first element, eligibility, is determined by your turnover, which was recently increased due to COVID-19 from 10 million or less to 500 million or less, and you purchased the asset between 12th of March 2020 and potentially 31st of December 2020. Or you purchased prior to the 12th of March, but it was first used or installed, ready for use within these time frames. The thresholds have changed over the years. As listed on the screen, and potentially now from the 1st of January 21, the limit will drop dramatically to $1,000. So now is the time to consider your options and this opportunity. We encourage you to reach out and discuss further whether this is the right strategy for you and your business, as not one size fits all, and to make calculated assessment rather than guess what would be prudent. So some exclusions to consider around assets purchased, like those through a leasing finance arrangement rather than a hire purchase, or assets like horticultural plants like grapevines or fruit trees for orchard growers. Software and capital works, also known as the building costs, are not part of the $150,000 instant asset write-off. If unsure, I recommend you seek clarification before proceeding. A trap many people fall into is they think they can buy a car for the business. A real flash car, say a $140,000 Mercedes, or even an $80,000 Lexus. But the car limit, which has been in legislation for a long time, states that passenger vehicles, this includes 4-door utes that can carry less than 1 tonne, are limited to car limits, for which the 2019-20 year is at 57,581. A logbook must still be kept, your best 12 consecutive weeks, to determine what percentage this car limit will be claimed at. Now you've determined the type of asset. Let's say it's a refrigerated delivery truck to the value of $150,000. This cost must be the full price on the invoice per asset, without trade-ins, reducing it, or limiting extra accessories such as mag wheels or a sunroof or a bull bar as a separate feature. They are part of the asset. If you are registered for GST, then the $150,000 includes GST, so your taxable write-off value drops by the GST component you claim through your BAS, or in this case $13,636, leaving $136,363 as the cost base. Or, comparatively, if you are not registered for GST, then the GST forms part of the cost price of the asset and is the asset write-off value, not a penny more. These facts must be taken into consideration before you purchase to make sure you are entitled to the full legislative deduction and how that impacts your business income. I will leave you with 7 simple tax planning tips to support you in your business. First, prepay your expenses before 30th of June. Substantiation is a key factor with the ATO. Keeping diaries, logbooks will help you support your deductions. Invoice after the 30th of June. So if you can hold off, it's a good thing to invoice your customers after the 30th of June. Also, pay your super contributions for yourself and your staff prior to the 30th of June. Obviously, utilise the $150,000 instant asset write-off, which we've been talking about. Landlords, if you have purchased and own a rental property, you might want to consider having a quality surveyor provide you with a report. It provides you with additional non-cash deductions. Reach out to me to find out how that works. And finally, use cloud software to help you manage your expenses and income, keeping on track. We will be back before the 30th of June with further tax updates, but in the meantime, thanks for listening, and as always, if you need advice, please reach out to us by telephoning, emailing, or going to our website and booking an appointment. Take care and stay safe, everyone. Until next time.